Hi guys, welcome to the last video in our course. I hope you found the course very beneficial and I hope you've actually took on what we've said and you are going to either start this trading journey with us or continue trading journey in a better way where you can actually become a profitable trader. So in this last video, what we wanted to talk about is just moving forward and how you should progress from this point onwards now, and just a few things you need to remember going forward, and literally how you will be, as I always say, just accountable for yourself, because at the end of the day, you will be self-employed, and there's a thin line between being self-employed and unemployed sometimes. So we'll get into it. First of all, you always need to remember what is your edge in the market and how will you maintain it. Now you will have a technical edge and you have what I started calling the mental edge. You will realize you are your own edge in the market. So whether that's you're more disciplined than some other traders, you will stand in front of these big falling knives moves with small stops because you have back tested their strategy, you have forward tested the strategy to its absolute extreme. You will constantly need to reassure that you have this edge in the market, because if you don't, then the market will start winning, and you'll see this come out in your trades when you do have periods of winners or losers, because it's going to be much harder for you to maintain that edge if you're not actively sitting there and you're working on it, and you are actually looking back and seeing what works and what doesn't work. You'll quickly realize your edge will deteriorate. Also, just you need to be constantly, like, not saying constantly looking for new strategies, constantly being aware of things that work and don't work. If you hit five trades in a row, which are all losers, look into them. If it's not working, do the opposite, because the opposite must be working. Find strategies with things that don't work, because that will keep you in that learning and continuous progress stage where you are learning, you are adapting yourself to the market constantly. So yeah, just remember, you have to maintain your edge. Once you find, I'm not saying you'll need an edge right now in the market. You'll find what your edge is. The more you start to trade and the more you take on the things we have talked about in all these lectures, you'll realize what your edge is, and you realize how you can adapt yourself, how you can adapt your mentality to the market as well. So moving on, capital preservation is better than capital loss is always true. If the market doesn't set up your trade, don't go out looking for. And I've talked about this in the previous lectures, and I always say this when people come to me and they're like, "Oh, I haven't took a trade all week, and this will happen, this will happen, this will happen." Don't worry about it. If you're sitting on your hands because the trade hasn't happened, the market hasn't gone into an area where you are looking for it to go, and you haven't come out on top, yes, you haven't took the trade, but also you haven't lost your capital. And capital preservation is always better than capital loss. So just remember that. Don't go out looking for trades. Don't go out chasing the market with something we've always talked about, because it's not going to pay out. It may pay out once or twice, and you might get lucky. But the time you don't get lucky, you will lose, and it's going to affect your strike rate significantly. So be aware of this and appreciate the time you do sit on your hands. Use that time, utilize that time, because you might feel like, oh, I'm not in a trade, so I'm not doing something. Utilize that time. This comes back to maintaining your edge and actually being aware of what's happening in the market. Use that time to learn something else about the markets. Use that time to learn different risk correlations or a different pair maybe you want to get into. Just stuff like this. You always want to be learning, you always want to be improving. That actually leads me on to backtesting itself. Backtesting is a key to any trader, and if you want to be successful again, you'll have to take backtesting very, very seriously and replicate. I know you won't be able to replicate the trading environment fully, but replicate it to a point where it's a mirror image, because you'll see how much progress you have and how much confidence you have in your strategy when you see like strong statistics on a given setup, on a given day, on a given time. Maybe, on the Tuesday at 2 p.m, euro dollar always trades above the Monday open or the Monday close. So, or on the Wednesday morning during London open hours, the weekly high, the weekly low is established, and from then on the market goes the other way. Stuff like this. Find these things out, and you will be able to find these things out through your backtesting. So expectations of what the market should be doing, because if it's not doing what you think should be doing, then you're not reading it right. Classic Dante quote here: And it's true for everything. Like the other day, we've had a trade on, and we're looking at the market. The market came into our trade, and it just completely plummeted, taking our stops. We're down one on a day, and to us, that was the reason. Like we weren't reading the market because there was something wasn't going on. Equities were up, but the dollar index was also up as well. So we're curious toward the money flows, and that's a mistake we spotted straight away as soon as our trade went to stop, because we just didn't have a clear vision of what the market was doing or where the money flows were essentially. So that's why like it took us out. But these things happen. Like we are limiting these things, and we have learned from it. Now we've got a thing in place to prevent these things from happening. Like you realize if you are continuing to be in a pantheon, you realize if we do hit stop, we'll analyze that trade on that day. We'll stay in the office later and analyze that trade through and through, and we'll make sure we're not making the same mistake like after that. Which like quicker you eliminate mistakes like this, the better you'll be as a trader. So another thing is, remember, human behavior repeats itself. So look where traders are entering the market and try to benefit from it. When you do look at the market, this won't be something that happens now as you are developing, but later on, you want to be looking for these areas where these traders have their stops, but also think, how can I I know this will sound mean, but how can I cause the most amount of pain to someone in this market here? And when you start to pinpoint those spots, that's where you want to enter, because that's where they will be exiting. They don't want, like, if they trade off a breaker candle to the upside, let's say, because they want to catch this move out of this range, they'll have the stop below the swing low. That's where the market's going to go, because the market needs orders. That's where it's going to get its orders, but that's also the point of maximum pain for these traders. And once the market gets there, they're going to be saying, I don't want to be in this trade anymore, get me out as quickly as possible. And the market may not be there for several days, yet they'll still be in that order, like looking at the P&L, and the longer they spend underwater, the quicker they want to get out eventually when the market does come back into that area. So be wary of those areas, be wary of these human behaviors, as I said, because people, like, human behavior doesn't change. People develop habits and they trade by habit. That's why, as I said earlier, there's in earlier lectures, there's traders out there who's been trading the same strategies for 10 or 15 years at a time. So yeah, just benefit from where these people are entering, because at the end of the day, you're trying to take their money, they're trying to take your money, and there's only going to be one winner. And if it's not you, it's going to be them. Another thing is, yeah. So as I said in the beginning, I think like trading is not easy, but if you stay disciplined and if you implement like these things we have talked about in the lectures, you will have a great chance of success. I'm not saying you're going to be successful, and I can't ever promise you will be successful, but if you implement the things we are saying, there's a great chance you will be, because nothing's ever certain in this game. Our strategy could work today and not work tomorrow, because the market might change. Like that's why you always have to stay on top of your edge. You have to take these things very, very seriously. It's not just a thing. Like the more effort you put in, the more results you'll see. It's as anything. Like sometimes it is a straight career path. You can do these things on the side, and like I've got nothing against you doing that, but you're still gonna have to put some sort of effort to actually understand the market, understand the market players. So just remember, implement these things, everything we talk about from the beginning. Your journey to become profitable may be shortened than some people's journeys, because I know traders that have been trading for years yet don't utilize the journal, and essentially are break-even traders, because if you don't utilize your journal, you can't progress. It's as simple as that. So implement the things we talk about from the beginning. I can't stress this enough. Having predetermined stops in the market to get out the trade sooner if the market doesn't go in your intended direction, as you can't afford to let the market go to your stop all the time. So this is something you'll actually start to develop as well as you trade, because you don't want to be taking full losers all the time. You just can't afford this. And this is something we talk about, one of the extra webinars in the course, where you want to have these areas. If you have your stop in the market, your stop is where you are wrong in the trade. If the market gets down into that area, you are wrong, you're out the market. So you want to enter as close as possible to where you are wrong. That's how you get the best trades. Also, that's how you like get the most fear out of the trade as well, because you are scared, because there's only a few pips, let's say, between your entry and your stop. So you are like wondering whether you'll go to your stop or not. So, but at the same time, if the market does go into your area, into your entry, and it trades within this very close to your stop, you want to be aware of the price action that's going on. You want to be aware of any market structure on the time frame you're trading, or on lower high time frames that may contradict your trade idea. I'm not saying use them all the time, but you want to be aware of and see what works, what doesn't. Go back into your journal and see, maybe if you're trading the 15-minute on the hourly, there's a bearish engulfing candle which is going against your trade, and in the past it has took you out. Take that information and see how many times has it took you out in the past, and how many times is it likely to take you out now. Because if there's an 80% chance it will take you out or take your stop, then it might be worth for you to get out that trade. But you need to be aware of these things, and you gather statistics on these things as well, because you don't want to be flicking through time frames just looking for any candlestick patterns that actually do contradict your trade idea, because you will never benefit from this. But as I said, you don't want to be taking the full minus 1%, minus 2% stop losses all the time, because you won't be profitable in the long run. Another thing is, I've got a few things on this screen, as you can see. These two here, I know these two here actually come from ICT. I took these from his YouTube channel, so I'm not taking any credit for that at all, but they're actually very useful, so we'll talk about it in a minute. This is a quote. I can't remember where I got this from, and I can't remember where I got this from either, but I do tend to like pick some very interesting things I do find from other traders, because they do make sense, and you do, like, you find out, like, the good traders out there do say the same things, because even though they trade a different strategy, they understand the fundamental reasons why the market's move in a certain way, and the players that do move them. So, and this quote down here is actually talking about the reliance on technical analysis. So any person with a good brain on shoulders will ultimately come to realization that these are just tools. So technical analysis tools that are built on the historical and lagging databases. Moreover, the rigidity of the parameters used in the studies imposes rigid responses to changing market conditions. So have we forgotten that the market is a live beast that learns and adapts to trader behaviors? Many have forgotten that the market is the sum total of the behavior of the participants engaged in marketplace behavior. These tools are used for measuring the market's health, not so unlike the thermometer to a doctor or the measuring tape to a carpenter. It's just a tool. That's why we always stress you don't just use one technical analysis. So you use plenty of tools, as these, like the doctor is not just going to use the thermometer as his only tool. We have different tools to analyze the patient. You want to have different tools to analyze the markets. Essentially, you want to have a rounded image, and you want to know what you are looking for all the time. How are you going to implement these steps, and do go out and implement those steps? It's as simple as that. Another thing I got on here is an extract from, I believe that was a book actually. So I'm a consistent winner because I objectify, identify my edge. Something we talked about in the beginning. I predefine the risk of every trade. This is what you're going to have in your trading plan. I completely accept the risk. I am willing to let go of the trade. So you don't drive your trades on hope. As we talked about in psychology, you're not hopeful in trade. You have statistics backing up your trade, so you do accept you have the risk on that trade, and you're not forced to make your stops, move your stops to break even, just so you don't see these red figures on MT4, for example. I act on my edges without reservation, hesitation. This once again it will come to experience. The more experienced you are, the more comfortable you'll be trusting your trading plan, if you have those statistics in place. If you don't, if you go years without having statistics and areas, and you don't identify your edge, and you don't have consistent winners and consistent losers, you just kind of in between, you will have hesitation, and there's nothing you can do about that until you have the confidence to actually go out there and trade accordingly to your plan. And that confidence is only going to come without you. And you can't say, oh, I'm going to be confident once I start making money. No, you need to be confident now, because you're never going to start making money otherwise. I pay myself as the market money is available to me. So you're not paying yourself because you're scared of, oh, I'm $100 up, but the market is likely to go to 10R and I've only took 1R. If the market is likely to go 10R and you have tested and you've seen the market go 10R, why are you taking profits early? Pay yourself accordingly, try your stops, or unload your position, so take half position off when it gets to like key turning points. I continually monitor my success. So I can't even say this, susceptibility for making errors. So you know why you're making these errors. That's where your Syntally actually comes in. You know why you're making these errors and you work those errors. And finally, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. This just comes back to discipline. You need to be a disciplined trader. And if you're not a disciplined trader, you won't be a successful trader. And that's it. And these last two things I got in here, I won't read through all of them. You can have a read for a pause this video. It's actually taken from ICT, and it was a video about what he would advise. I think the title of the video was what he would advise 20-year-old traders to actually do and how he would have done it if he was 20 again. And some of like the things I've got on here, which I'm like, I do actually live by all the time, is be a specialist in a single market or two markets at most. You don't want to be trading a lot of markets. Learn one market, learn how it behaves, and watch your strike rate in that market just skyrocket. Because if you spend all day looking at one or two markets, think how like you learn to recognize price action and price moves, and how different news releases affect that market. You will build up. Yeah, you might get less trades, but would you rather have less trades and a high strike rate, or would you have more trades and a lower strike rate? Like if your aim is to be profitable in the long run, which out of the two I just mentioned, do you think profitability goes hand in hand with? Because for me, it is the first one. Rather have a high strike rate and know, based on my strike rate, how much I will get paid every month. Well, I'll never know for certain, but how much I'm likely to get paid every month based on the amount of trades I take, which is just easy to forecast my future. Keep a study journal, record your observations. It's key. I bang on about this all the time, but if you don't do it, you won't progress. It's as simple as that. If you have your journal, you can look for your mistakes and know how you can change this, or how we can help you to change this. Don't buy every course you see. Like, it's as simple as that. If you're moving from strategy to strategy, you don't have time to actually understand the strategy and understand yourself trading alongside that strategy. That's why we want to introduce the understanding market structure lectures to you first, before we actually introduce this specific strategy for you to trade off from, because you want to understand the market, where the market is at this moment, and where it's likely to head, and where it's likely headed to, and then you want to implement what you know and how you can benefit from the way the market is likely to move. Yeah, and just expect this to be challenging, but it will be worth it. If you do it properly, it will be worth it. It is, like, for me personally, I can tell you now, it is long hours, and sometimes you go a week or 2 weeks with either not taking a trade or taking bad trades, which end up being which you lose on, and it's hard to get out of. But if you have these expectancy models and you have built data, and you know, okay, this just might be a bad period. If I have a 70% strike rate, I can't remember how many trades in a row I'm most likely to lose. It's about 50 or 60%, I believe. These things happen. Everyone goes through periods where they won't be profitable for days, weeks, sometimes even months. But you will have periods where you will be profitable, and you will be in sync the market so much where you will see these winners. And just be aware of what you can achieve, because the work you put in, like, I know there's no instant gratification of trading, and sometimes it'll take years, but think once you get to that point, what you will be able to do with it. But don't think about the money, think about what you can actually achieve. You want to be out there taking the best trades possible, and the money will follow. Like, as we've talked throughout this course, the money will follow. And just the last point I wanted to talk about, I think, was where is it now? Develop a framework for a market-based approach based on high time frame analysis. So you want to be implementing those high time frames to your own trade, and you want to be aware of where the market is likely to headed within the next few days or the next few weeks, and then to try and take trades on the lower time frames according to that, because you will realize, like, most of the time, I'm not saying all the time because you might find different statistics, but most of the time you will realize that you are likely to have high strike rate going with the trend. But you need to be smart about this. You don't want to be following every breakout. Look for these areas where, as I said, where human behavior repeats itself. Look for these areas where the price action is most likely to cause the most pain to someone, and step in the market at that point to benefit from it, and you will see how your profitability will increase. But on that, I think I can wrap this up for you guys. You can take a screenshot of this if you want, or if you want to send it you separately, I can send this to you so you can like adopt some of these things into your trading plan. But I hope you have enjoyed the course, and if you do have any questions, just shoot me and Kieran a message, and I shall see you later.